I think a lot of people are hopeful that inflation is peaked. I agree that it has peaked, but I also think that that's not the right question to be asking. The right question to be asking is, how far down is it going to go? The hopeful crowd thinks it's going to go back to 2%. That means the Fed can stop raising rates, and maybe we could even start talking in the second half of 2023 about them cutting rates. And that's got financial markets, mainly the stock market, excited in the last few days. I'm of the opinion that it's not going to go down that far. It's going to go down to maybe 4%, and that the Fed raising rates to somewhere near 5% only gets you back to neutral. And at some point, there will be a movement to get the Fed to actual restrictive territory. And when we do that, I suspect then we'll get that recession that everybody has been forecasting to happen in 2023. There's two FTXs that people should be aware of. There's FTX US, which is a US regulated exchange. That one went into bankruptcy too, but only because its reputation was being trashed because it was FTX. But by all understanding, at least as of the time of recording, nobody's going to lose a whole lot of money on that side of the equation. There's a global one that was headquartered in the Bahamas called FTX.com. That's the much larger one. And that's the one where there's all of the problems. The FTT thing you mentioned, that is their own cryptocurrency, the FTT token that they issued. And I'll try and explain that in a second. Alameda Research, as you pointed out, was the original company Sam Bankman-Fried created 5 years ago in 2017. It is a trading firm. It is a hedge fund. It trades in cryptocurrencies, a little bit in the traditional markets, but mainly in cryptocurrencies. As best the story's been pieced together, if you back up 6 months ago, you'll probably remember that the Terra Luna blockchain failed and the UST stablecoin went from $1 to zero in less than a week. And from that, there was a lot of bankruptcies. Three Arrows Capital, the big venture fund that was in the crypto space, Celsius, which was another centralized exchange, Voyager Digital, another centralized exchange. They all failed in the wake of that. What we now are learning is, so did Alameda Research. They wound up losing so much money that they were probably undercapitalized or at a minus 100% or something to that extent. We didn't know that because Sam Bankman-Fried, who owns Alameda Research and owns FTX, and they have no real corporate board structure. He kind of runs the show between both of them, was using customer funds at FTX to extend loans to Alameda Research to keep them solvent. And they were buying up all these other bankrupt firms like Celsius and Voyager Digital because they had extreme exposure to them. So instead of taking losses on that, they would buy them up and bring them internally. Let me stop here and point out what I have described is a centralized exchange/bank committing malfeasance, or at least maybe fraud at the worst. We've seen this in the traditional world over and over and over again. The last example of somebody taking customer funds for their own personal use was MF Global, run by John Corzine, former governor of New Jersey and co-CEO of Goldman Sachs, did it in 2011. We saw these kind of bank failures all throughout 2008. If you want to go back to 1994, we saw this kind of gimmickry that they were doing with the entire Mexican banking system during the tequila crisis. None of this is new to that extent, and none of this is really a crypto problem. It's not a failure of a blockchain, not a failure of that. Now, you could argue that the animal spirits and the wild speculation in crypto led to this aggressive behavior, compounded by the fact that these foreign exchanges have virtually no regulation. As a matter of fact, somebody was saying that they are so unregulated that the only thing that lawmakers or the police or investigators are going to have to get Sam Bankman-Fried on is he violated his terms of service. He didn't even violate laws because there are no laws for these global types of exchanges, which, by the way, in fairness to the industry, They have been screaming to the SEC and everybody else to make such laws. And the SEC and a lot of other regulators have been slow walking this whole lawmaking thing, largely because they're not exactly sure what they're supposed to do yet. They're still trying to understand this new space. And then we've got this blow up as well. So it is a failure of the types that we saw in the 30s, in the bank runs in the 30s. It is, or we saw in 2008, we saw in 2011 MF Global, or even to some extent a little bit in 2020. That's not new. What is new is the space that it came in on. And lastly, you mentioned the FTT token. What that was that they created their own printing press. Is what they did was they issued their own token. They then transferred a bunch of those tokens to Alameda Research. Alameda used those as collateral to take out loans for more legitimate tokens like Bitcoin or Ethereum or USDC Circle, the stable coin. And they were basically, like I said, we're creating these tokens out of thin air and using them as collateral for other loans. That is a big red flag. That should have never happened in the first place. That might be unique to the crypto space. You and me, at last count, we're still not allowed to have a printing press in our basement to basically print up fake dollar bills. And then you run to the bank with those fake dollar bills and go, here's $1 million of fake dollar bills. Now give me $1 million loan. And so that's essentially what they wound up doing. But I think where the mistake came was somewhere along the line when prices peaked and losses started to occur, they started cutting corners to support the hedge fund business. I'm guessing under the guise that everybody has, and then when the market rebounds, I'll pay it all back. Mm-hmm. And then when the losses came from Terra Luna and they really started to do things that were unethical, I'm surmising that the rationalization you give yourself is, yes, and then when the market rebounds, everybody will be made whole and no one will be hurt or none the wiser. But then you wind up getting sucked deeper and deeper and deeper into this. Then about 2 weeks ago, CoinDesk, which is a popular website for cryptocurrency news, got a hold of their balance sheet or part of their balance sheet, which showed all of these FTT tokens, which are, again, I'm going to issue a cryptocurrency. Good. I just issued 5 billion of it. I send it to my other entity, Alameda Research. They then go out to cryptocurrency lenders and say, I got 5 billion of FTT. Give me a 5 billion loan of something legitimate. And that's what the balance sheet showed. And it got people a lot of nervousness about the financial position of FTT. One of the people that owned a lot of FTT token is the biggest cryptocurrency firm in the world, Binance. Now, when Sam Bankman-Fried started FTT in 2019, one of his original backers that really helped him get it off the ground was Binance. And he was very close with CZ. And they subsequent CZ, Chamath Peng, if I'm pronouncing it right, goes by CZ. It's a lot easier like SBF. And he helped him start this exchange. And then they had a difference of opinion and a little bit of falling out. One of the things that Sam Bankman-Fried has done along the way that has rubbed the cryptocurrency community the wrong way is he has spent an enormous sum of money on political donations. He is was the number 2 donor to the Democrat Party behind George Soros. He gave $40 million to the Democrat Party in the midterm election cycle. He was using his influence and his money in Washington to help regulators write the cryptocurrency regulations that they're currently working on. They're not done, they're working on it. A lot of people in the industry were very uncomfortable with him because they didn't think he represented the best interest of the industry, that he was going to use his vision of regulation to build a moat around FTX. Or as the joke went, he's trying to take the FTX business plan and make it the law of the land. And if you're not the FTX business plan, you're going to find it very difficult to do business. And so what CZ did, I think, when he saw the balance sheet, this is, again, speculation, and I happen to believe it, he wasn't playing 4D chess here. I'm going to bury this guy, and I'm going to bankrupt his firm in 2 days. he was going to sell his FTT tokens, and he made a comment on Twitter. And by the way, everything in the cryptocurrency space happens in real time on Twitter. They communicate with each other, secret negotiations. I'm not kidding you, secret negotiation. Everything is done on Twitter for everybody to watch. And so when he tweets out, CZ tweets out, I'm going to sell my FTT tokens. He also makes a comment, and I don't trust people that turn their back on the industry in Washington, or something to that effect. Mm-hmm. I think he wanted to embarrass him. I don't think he thought that this was going to open the trap door and the entire firm was going to collapse, take the cryptocurrency market with it. But what he didn't know, what we didn't know, was just how precarious a position FTX was in. And what I think CZ underestimated, and we all underestimated, is how in the crypto universe, Sam Bankman-Fried was not very trustworthy. So the minute that there was a problem, people had no problem running for the door.